Okay, guys, welcome back. Good afternoon, and my name is HANSPAL. And in this session, we're going to continue our sessions on financial management, session number 3. Right, let me open the live chat as well. Yeah, financial management, session number 3. And in this session, we'll be talking about capital structures. Capital structure. So, see, from my previous sessions on financial management 1 and financial management 2, it is quite clear that what do we mean by the capital structure. And capital structure में company के क्या होता है? Like we're talking about debt and equity. Okay, so for a layman, ये मान के चलो the capital structure of the company comprises of the equity and debt. And equity or the shares of the company or the stock of the company can further be bifurcated into your equity share capital and the preference share capital. Okay, so basically we can say that we have the equity share capital, we have the preference share capital, and we have the debt capital. Okay, though like there can be some kind of other sources of finance also, like from which the company raises money. There can be, see, in your debt there are bonds, debentures or fixed income securities. So हमारे सब debt में आ जाए. Okay, your like treasury bills. So debt का मतलब सिर्फ ये नहीं होता कि long term loans, that's it. Bonds, debentures or loans or fixed income securities or commercial papers or certificate of deposits, everything would be included in your WACC. WACC is nothing but your total cost of capital, like उसकी हम बात करेंगे. But debt में तुम्हारी सारी fixed income securities आएंगी. Okay, so that you need to understand. So the capital structure is basically composed of your equity and debt, and that you need to know. Okay, that is a major scenario. अब यहाँ पे हम बात करते हैं to calculate the cost of the capital total. So before understanding the cost of capital, let's talk about the individual sources of finance. What equity, debt, and preference shares. अभी के लिए let's take equity and preference shares separately. Though for the purpose of calculation, companies tend to take your equity and the preference shares combined. Okay, but अभी for the sake of simplicity के लिए like हम तीनों को divide करके समझते हैं like अलग अलग से. So let's talk about the debt first. पहले हम debt की बात करते हैं. Debt हमें पता है क्या है? Is nothing but your fixed obligation that you have to pay. Simple बोले तो कर्जा जो तुम्हें चुकाना है. Okay, so that is your debt. ठीक है, अब हम debt की बात कर रहे हैं. Debt can be all fixed income securities, but let's categorize into two forms, your bonds and debentures. Again, people tend to like synonymize both of them. They say that bonds and debentures are one and the same thing. No, bonds and debentures are not one and the same thing. Though they're used synonymously, in India, the word debenture is more used. Outside India, in foreign countries, your UK or USA, bonds are more used. Like you might have heard people calling about the 2 years bond, 3-year yield bonds have increased and all that stuff. Okay. But both the concept of both of them is the same, because ultimately these are kinds of loans which a company has taken and the company has to pay a fixed rate of interest on bonds and debentures. Okay, so first let's understand the concept of debt. Like for example, if I have a company, okay, if I have a company and I want to raise some money, okay, so I will be issuing debt or debt basically. So debt is not a kind of a box or a kind of uh, instrument like which I'm giving to public. It's just a piece of paper. On that piece of paper, either issued offline mode physically or in an online mode of like digital mode and on like various platforms, it is just written that I am issuing debt for like 5,000 crore rupees and I will be giving a rate of interest of 6% on that. Okay, so this is a way in which the company issues debt. No hard earned commodity, no kind of a box or a stone is given to people कि ये debt है, हम debt ले रहे हैं. No. Okay, so like that is the scenario. Now this debt can be categorized into your bonds and debentures. So when we talk about bonds, your bonds are secured. I'll write here as S. Your bonds are secured. How they are secured? Like for example, if I have taken a loan, okay, basically for a home loan or a car loan, so I have something as a collateral or a mortgage, right? अगर मैंने home loan लिया है, and if I'm not able to pay back the EMI, the equated monthly installments on that home loan, the bank will seize my house and will auction that house and earn that money back, right? Similarly, if I have taken a car loan, the bank will take away my car if I'm not able to pay back my installments and will auction that car in the market and get the money, right? So that is one thing. So when we are talking about bonds, they are secured. Similarly, if my company is raising money, if I want some money and if I'm not able to pay back the interest to the people, interest on that debt security to the people, then I will assure the people who have given loan to me that I will be selling off my assets. And once my assets have been sold off, like you would be able to recover that money. So some surety is there, like in the case of a bond. So in a bond, we can say that they have a collateral or they're secured by a mortgage. Okay, but in case of a debenture, they are your unsecured. Whereas US does not stand for United States, it's unsecured. I'll put a dash in between unsecured. It means if I am raising some money, if I am demanding, if debt money liya hai, and my company is giving a 6% rate of interest. Okay, and if I'm not able to pay back that interest payment and my company goes in like into the verge of bankruptcy and liquidation, I will not be able to pay back because ultimately I have not promised that my assets are liable for that. Then you are like long kind of the bankruptcy proceedings. Your like insolvency and bankruptcy code comes into place, and those year and year long proceedings go there. So that's a complicated scenario. Okay. The other difference is when the company is going into liquidation. When the company is going into liquidation, again the bondholders would be paid back the money first because ultimately the company's assets are secured for them. And the debentures holders like will be paid the last if some amount is left. Though like they would be paid before the equity shareholders, but debenture holders को bonds के बाद में payment करी जाएगी because they have no assets or collateral or mortgage secured for them, right? The third and the most important difference is bonds have a lower rate of interest, and debentures have a higher rate of interest. Why? Because bonds are secured by collateral by a mortgage. There is a lesser amount of risk. Agar company is not able to pay back the interest payment, the company assets would be used for that purpose, right? But in case of debentures, the company has no assets to pay back to like pay off the liabilities. The company is not able to pay back the interest payment, so they are more risky. And the basic rule of any of the markets of finance: higher the risk, higher is the expected return. Here, the return is in the form of the interest payment that the people are getting. Understood? So that is the basic difference between the bonds and debentures. Now, your debt will include everything: your bonds, debentures. It will include your commercial papers. Again, these commercial papers are like short-term debt instruments, like which are used for the working capital needs. Certificate of deposits is almost the same. You can also include your treasury bills, T notes, T bonds. ये separate होते हैं. But treasury bills are those like which have a maturity period of less than 1 year. Like you might have heard about the 91 days treasury bill. Then you have this 182 days treasury bill and then 364 days treasury bill. इसको याद करने का like simple तरीका बस 91 को याद कर लो, into 2 करते जाओ. So like below 365 days. So these bills are issued for like less than 1 year. Okay, yeah, so like in like you'll get a short-term interest rate on the basis of 3 months, 6 months, or like 9 months के basis पे मतलब तुम्हें like interest rate मिलता जाएगा. Like that is the one scenario. Or the second thing can be they might be issued at discount and redeemed at par. हो सकता है 100 रुपए का बिल हो वो तुमको 90 पे मिल जाए. And at the time you sell that bill, you can sell it at 100 rupees and 10 rupees is your profit. So that's the concept of issued at discount and redeemed at par. You purchase at discount and sold at par. Okay, that is the other scenario. But treasury notes have a maturity period from like more than 1 year to 10 years. 1 साल से 10 साल तक. And they get a rate of interest semi-annually. साल में 2 बारी they get a rate of interest. So if a T note, it promises you to pay 6% rate of interest semi-annually. It does not mean that it will pay you 12% rate of interest annually. It means by 3% in first 6 months, 3% like in the next 6 months. So do not confuse that. So if a treasury note is giving you 12% rate of interest, then why would people go for equity then? right? And T bonds have more than 10 years key maturity from 10 years to 30 years, and they also pay you the rate of interest semi-annually. Your treasury notes will pay you a more rate of interest than treasury bills, but treasury bonds will pay you the highest rate of interest as compared to T bills and T bonds because these are for long term. And in long term, you have the interest rate volatility. Short term, the interest rate volatility is less, but in long term, it is more. So since there is more interest rate volatility, you are taking higher risk. And for higher risk, you're getting higher return. But in all these securities, like you might get a lower return as compared to equity. Why? Because equity is a high risk instrument. And people invest into equity for higher return. But यहाँ पे तुम्हें एक fixed rate of interest मिल जाएगा. Equity market चाहे बढ़े, चाहे गिरे, चाहे same रहे. Same को we call as a period of consolidation. When the market is neither rising nor falling, it is stagnant. कुछ भी हो, fixed rate of interest मिलेगा ही मिलेगा. If it's a fixed bond, a fixed debenture, a fixed rate commercial paper, a fixed rate certificate of deposit. Floating हुआ तो change होता है, fixed हुआ तो change नहीं होगा. ओके, फिक्स्ड हुआ तो अगर मार्केट के इंटरेस्ट भी बढ़ जाएंगे, कम हो जाएंगे, चेंज नहीं होगा. बट इन दैट केस लाइक इट कैन बी अ लॉस. अगर मार्केट का रेट ऑफ इंटरेस्ट बढ़ गया तो तुमको फिर कम ही मिलेगा. अगर मार्केट का रेट ऑफ इंटरेस्ट कम हो गया बट योर इंटरेस्ट रेट फिक्स्ड इज मोर, देन लाइक यू आर एट अ बेनिफिट. इन अ फ्लोटिंग रेट बॉन्ड तुम्हारा जो मतलब कि मार्केट रेट ऑफ इंटरेस्ट अगर बढ़ रहा है तो बढ़ेगा, कम हुआ तो कम होगा. ठीक है, बट यू आर फिक्स्ड इफ यू हैव एन ऑप्शन ऑफ टेकिंग अ फिक्स्ड रेट. Okay, floating का तो fixed rate is always issued at a 1% or like 1.5% higher than the floating rate. And why that fixed rate is issued higher than the floating rate? Just in case like a floating rate घट गया या बढ़ गया तो at least the company can balance it out somewhere. Okay, so that is one thing. हाँ. Now you have more types of fixed instruments. It can be even your fixed deposits, FDs. ठीक है, your PPF, your NPS. So like these are used more in terms of your इंडिविजुअल कैपेसिटीज में ही मतलब कि ज्यादा यूज होते हैं. योर सुकन्या समृद्धि योजना, योर नेशनल सेविंग सर्टिफिकेट्स, योर सीनियर सेविंग डिपॉजिट स्कीम्स. ओके, these are used more in terms of the individual capacity and less in terms of companies. Okay, this is the difference that you need to know and understand. ठीक है, तो अब हमारा हमको डेट क्लियर हो गया. Let's go back. Let's do some calculations on debt. Now your debt can be of two types. It can be a redeemable debt. It can be a non-redeemable debt. So by redeemable debt we mean it can be redeemed. मतलब कोई lock-in period, like for example, if a debt has been issued for 3 years, so before 3 years you can exit from that debt scheme. Okay, so it's like kind of redeemable. You can get your money like before that, but in non-redeemable you cannot exit the debt scheme. ठीक है, तुमको lock-in period के बाद ही पैसा मिलेगा. ठीक है, so when we talk about your non-redeemable debt, your non-redeemable debt is also called a perpetual debt. मतलब कि लाइफ लॉन्ग चले जा रहा है एंड कोई फिक्स टाइम पीरियड नहीं है कि कब खत्म होगा. हाउ टू कैलकुलेट द कॉस्ट? हम के डी लिखते हैं के ऊपर एंड डी इज इन द सबस्क्रिप्ट. The cost of perpetual debt is nothing but your interest payment. I stands for interest payment. 1 minus T divided by B. KD stands for your cost of debt. I stands for your interest payments. T stands for your tax payments. And B stands for your net proceeds. And what do we mean by net proceeds? Let's understand. The formula for the net proceeds is the face value of the debt plus your premium, if any, if the debt is issued at a premium, minus your discount if the debt is issued at a discount. F stands for your flotation cost. मैं लिख देता हूँ. BO is your like net proceeds. यहाँ से देख लेना. F is nothing but your face value plus PM stands for your premium. D stands for your discount. F stands for your flotation costs. फ्लोटेशन कॉस्ट इज नथिंग बट योर पेपर वर्क एंड ऑल, मतलब कि डेट इशू करने के खर्चे एंड थोड़े बहुत पेपर वर्क एंड चार्जेस जो लग जाते हैं, एडमिनिस्ट्रेशन चार्जेस एंड ऑल दो स्टफ. So if the face value of debt is 100 and the debt is issued at a 10% premium, it means 10% of 100, 10 rupees, 110 की वैल्यू है. अगर 10% डिस्काउंट है, 100 माइनस 10, 90 की वैल्यू है. तो अकॉर्डिंगली क्वेश्चन में लाइक यू हैव टू एडजस्ट. Okay, so let's do a question on this. I'll just remove this left hand side wala part. Let's find out a question for you. Okay. Let's take a random thing. Let's assume debt the company has taken. The company has taken a debt of 2 lakh rupees. Interest that the company has to pay is 10% on that. Tax rate is 30%. The company has issued a debt for 2 lakh rupees, having a face value of 100, paying interest rate of 10%, tax is 30%. Now this debt of 2 lakh of face value of 100 was issued at a premium of 10% and the flotation cost were 8%. Okay. Calculate the cost of non-redeemable debt. Now the cost of non-redeemable debt is your interest payment. Interest payment क्या होगा? 10% of 2 lakh, 20,000. 1 minus your tax rate, 30%. How to find the net proceeds? 100 तो है. 10% will always be calculated for the face value. Premium है plus 10. Again, 8% will always be for the face value. It won't be for 110. Always for the face value. Be it discount, be your premium, be it your flotation cost. They're always calculated on the face value. Minus 8. 11, 11, 10, 11, 10, 102 by 102 value. And once we try to solve it, there's nothing but your 20,000 into 0.70 divided by 102. 20,000 into 0.70. You get 14,000 rupees divided by 102. 137.2 is your cost of debt, which is very high. इतनी high नहीं होनी चाहिए. ठीक है? So that is the one scenario that you need to understand in this case as well. So like this was the case like when we talk about your non-redeemable debt. Understood? Now let's talk about your redeemable debt का formula. Redeemable debt. The cost of debt is equal to interest payment. I stands for interest, we all know. 1 minus tax payments plus your face value, or we can also call it as your redemption value, RV, minus your net proceeds by n. Only this part is divided by n, not this whole part. Now this whole would be divided by n. Here you'll have your face value or the redemption value. Face value लिख देता हूँ. BO by 2. I stands for interest payments. T stands for tax. F stands for face value or redemption value. B stands for net proceeds. N is for number of years. Debt कितने साल का लिया? Because ultimately अगर वो redeem हो रहा है, तो you have a specific time. 4 साल में हो रहा है, 5 years में, 6 years में, you have that specific timeline, which was not available to you in case of a non-redeemable debt. Okay, that is one thing you need to know. Now let's do like a short question on this also. Remove all those questions. ठीक है. अब in the question they have given you face value is 100 Company has issued 12.5% debentures, which are redeemable after 7 years. मतलब 12.5% का इंटरेस्ट पे करेगी कंपनी 100 रुपए पे, 7 साल का मैच्योरिटी पीरियड है. Now debentures are issued at a discount of 5%. Flotation cost they have given is 1%. Tax rate is 40%. They say you to calculate the cost of your redeemable debt. Okay. Now first task is to calculate your net proceeds. 100 face value है. 5% of 100 minus करेंगे always. -1. Because always of face value 5% of 100 face value will be of 5 rupees -5 and discount को minus करते हैं and premium को भी add. In this case we have the discount, so like we'll be subtracting 5 rupees. Rotation cost is 1% -1, you get 94 as your net proceeds. Interest payment kitna, like always pay interest on the face value, not on the net proceeds. People commit a mistake, they pay 12.5% on 94, that is wrong. All the calculations will be done on face value only. Interest is 12.5% of 100, 12.5 only. अब calculate करते हैं और cost of debt. Interest is 12.5, 1 minus your taxation. For redemption value of face value is 100. Net proceeds is 94. कितने साल के लिए लिया गया है? 7 years के लिए. बस ये bracket होगा divide 7 से. Divided by your 100 plus 94. इस पूरे को तुम divide कर दोगे 7 से, sorry 2 से. This 2 is constant. Okay. Some people tend to use what? Some people tend to use weights for that. 0.400 के लिए यूज कर लेंगे, 0.694 के लिए यूज कर लेंगे, but by 2 is the standard formula. Use the standard formula. So once you calculate it, you get 0.861, which is nothing but if you convert it to percentage, 8.61% का आंसर आ रहा. 8.61%. That's the cost of debt. This is how you calculated your cost of debt. Debt is clear now. After debt, yeah, you have something as your preference shares. What are the preference shares? See, equity shares are different from the preference shares. So what basically happens, your preference shares are given to some preferred people, and those are not traded on the stock exchanges. The company's management might decide that these kinds of shares have to be paid to some person, like maybe the people of the management or maybe some top corporate management. So basically through the private placement process we can say. उनके लिए एक अलग से IPO नहीं निकलता, they are paid separately. But the thing is that the preference shareholders have no voting rights. No voting rights. Your preference shares have no voting rights, but equity shareholders have voting rights. Understood? The major difference between the two, the preference shares have no voting rights, but the equity shares have voting rights. The second thing is they get dividend. First right over dividend. If the company declares dividend, the preference shareholders would be given the first, and after that the equity shareholders would be given. Some people get confused. They say that the preference shareholders are always paid dividend, no matter the company declares dividend or not. No. If the company is not declaring the dividend, then the preference shareholders also have not to be paid. Only if the company declares dividend, only in that scenario the preference shareholders have to be paid. Okay. The third thing is liquidation. If the company is like closing its operations or like shutting down its operations, and the company like is giving back the investors their money, the first preference would always be given to the debt holders, because ultimately they have a fixed obligation, a fixed interest payment that they're gonna get. The second right would be given to the preference shareholders because preferred him, and the third one will be given to the equity shareholders. The equity shareholders, that's why are the most risky ones. And that is why, like, whenever we talk about the equity shareholders, whenever we talk about the equity share, also called your residual claimants. Residual claimants भी कहते हैं. Why? Because they are the last ones. उनको last में कर रहा था because these are the most risky ones. Or like when we talk about the preference shares. Now again, your preference shares can be both types of preference shares can be like since we had in the case of debt. In the case of debt, you had your redeemable debt and irredeemable debt. Similarly, in the case of preference shares also, you have your redeemable preference shares and your irredeemable or non-redeemable. They mean the same thing. Now, like when we talk about your redeemable preference shares, your redeemable preference shares are those like which can be redeemed after some time. मतलब पैसा वापस पहले मिल जाएगा. But irredeemable preference shares are those preference shares which cannot be redeemed, like same as debt. तो उसमें वहाँ पे like you won't be having a time period for that. Okay, specifically, you won't be having a time period for that. Okay, so that is one thing you need to understand for that. Okay, so that is the major difference between your like redeemable debt and irredeemable debt, and your like the redeemable preference shares and irredeemable preference shares.